Yes, a warm welcome to panel 5, Business Models and Finance in the Age of Digitalization. This is the first session of this panel about innovative financing, and we have two main topics. The first topic is which role of blockchain can play to improve energy efficiency. And the second topic is how de-risking can be done through standardization and/or guarantees. And about the questions, if you have any questions, please write it in the Q&A section on the right side of Hoover. And we will have time after the presentations for discussion. But if you have any questions, just for clarification, so we have a correct understanding of the presentation, please ask directly after the presentation. So in the first presentation, Jacopo Visetti will present us EFFORCE, a first blockchain platform. Jacopo Visetti, he's the co-founder of EFFORCE and founded either CO2, also a leading company in the energy efficiency market. He has years of experience as a quantitative analyst and graduated in finance from Cattolica University of Milan and in macroeconomics for Harvard University.
Thank you very much, Diana. Thank you very much. Thank you, everyone. Now I'm going to start sharing my screen for the presentation of today. So today, the panel is, of course, as Diana said, the business models and finance in the age of digitalization. So one word from one of our co-founders, true innovation is the one that improves, of course, people's lives. And as everybody's aware, especially in this past few months, awareness has grown terribly about this topic. We should address global warming in all possible ways, and of course, we believe at EFFORCE that energy efficiency is one of the most efficient way in that sense to address it. So the presentation is gonna go through some of the challenges that they're faced and how blockchain can solve it. And of course, one of the first topics is renewable energy. Not really against energy efficiency, but what the big differences are and how these can be addressed with the technology underlying. So one of the first questions was why we can't simply, cover the surface of the earth with renewable energy. Well, of course, because there wouldn't be enough space, and that, of course, wouldn't be efficient. So the real answer to energy efficiency, as everybody knows, is to produce better results by consuming basically half the energy or less in that sense. And of course, this is what we define as energy efficiency. Main players in the market are energy service companies, which have been doing a terrific job, although a lot of difficulties in the financing side of things in the last decade. But the market itself for energy efficiency is an enormous potential. Just to give you a brief idea of the numbers, in the last 10 years, we've seen the energy efficiency market keep on growing, although it's ups and downs, but the tendency also been to increase investments in it. It has reached a market valuation of over $241 billion, and that's an average increase of 10% a year. Although returns of investments in energy efficiency, especially in some of the projects which target some technology, have seen an enormous amount of return of the investments into the projects. The market itself is still, I would say, a bit closed to most of outside investors, if not of professionals or dedicated, I would say, funds which do help companies do the transition to a more efficient world. Although all the investments that have been made, we haven't yet reached what's defined as the efficient world scenario. So a world where basically the investment reach a level under which we reach a level of efficiency which is sustainable for the planet. To get there, we need an additional $584 roughly billion between now and 2025, which, as you can understand, 5 years is really nothing. So we should really try to push the investments into the market. How can we do that? Well, first of all, we should address what the 4 main problems that we identified in the market are, despite it being a really interesting one. We can, first of all, define the lack of awareness. Many financial institutions know what energy efficiency is. They don't know how to finance it, or they do. And as they do finance other kind of projects, be that industrial a project as a whole, not necessarily linked to energy efficiency or other type of investments, they never really see, I would say, basically what the benefits are in investing that, like it could be a financial product. The second one, of course, is a really hard time for energy service companies to borrow, also because everyone, but in that sense, has a limit to borrow money for projects, and also the return of investments can take years in some very interesting energy efficiency projects. So of course the banks tend to first come back of the investment and then lend again. So that makes scalability a lot harder for energy service companies. Of course, also the lack of transparency. So how can we really monitor savings? There's many different technologies that can do that. But of course, to certify that as you would certify a net asset value for a bank in that sense, as a financial return, is really hard. So how can we have data that can't be compromised if we read it, if the company reads it, that there's a conflict of interest to who transcripts the data, who transmits it to the financial institution who financed that, so to actually understand what the returns are. And another thing that we miss a lot, at least when we started our venture, was the lack of platforms. So a platform or a market platform, if you want to see it, where you could actually exchange these savings as it is a financial performance, or as it could be a green bond, a digitalized green bond in that sense. So what we decided to create is a platform that basically allows everyone, regardless who you are, you might be a private individual, you might be a bank, you might be a fund, it makes no difference in that sense, to participate in projects, in energy efficiency projects, which are then basically digitalized. And how does that work? Well, thanks to blockchain technology, we took, I would say, two parts of that. The first one is that we were able to record data in an unbreakable way. What does this mean? It means that once the data is transcribed into a public chain, and that's the technology we're using, we're not using a private one, basically it's really hard to change the data, basically impossible, especially in the larger I would say the blockchain, the harder to do that. So basically what we can guarantee is a way of certifying a number of readings of meters or savings that are done in real time and then are basically unchangeable. And that creates basically the base to determine what the savings really are on any given moment, at any given moment in any given project. If we exclude human intervention, so we remove people who read the data or read it also from transmission of smart meters and then transcribe it into an Excel file, for example, which can then potentially be modified by anyone. This is done automatically, and there's no human intervention in that sense. So basically, the data is stored securely and unchangeably on a public chain, and therefore remains there for everyone to be seen, or at least for the people who need to see it. What's the business model behind this? Well, the business model is really simple. Investor through the platform can finance energy efficiency projects. The companies who are listed on the platform receive basically a part of the funds and to actually implement the energy efficiency projects and get their meter connected to a public chain via a system that we provide, and send the savings data in real time. Blockchain records this data and sends it back to the platform for the investors to see what the real savings are. In a few words, this is a very short example of how this could be done. This is a very easy relamping project, actually average size one, I would say, an industrial client. And the return of investments are very often kind of high, especially in the relamping. I did this example on purpose. There are other projects which yield a bit less. But just to give an example, the returns on energy efficiency is extremely high. And although this is the case, as I was saying at the beginning of the presentation, not many funds or not many people have access to these returns. So basically, most of the savings, if we see this as a financial product, are determined by the savings that are generated. And the more the savings can be achieved in any given company, the more, of course, the investors can earn, because the savings are the reflection of the returns. So basically what we do by doing tokenizing in that sense, each kilowatt of saved energy, we basically enable energy savings to become a tangible asset. And if it becomes a tangible asset like a share or a bond, it can be then traded on the market. And therefore, if you're able to do that, you're basically securitizing energy savings. And this innovation enables anyone who invests in energy efficiency, and that includes ESCOs, so energy service companies, to then free up a part of the capital because they could sell out along the futures curve part of the project or the saving that they're generating, which will then go back to pay the bank loans or the fund loans. And therefore, freeing up capital enables them to actually scale way faster in their projects, and therefore make it possible and faster to reach the efficient world scenario. So how do we reduce basically with technology the payback of the initial investment? First of all, by transforming energy savings into a tangible assets, we basically enable the possibility of transferring these assets. The second part is transparency. If you want to attract funds and you want to attract large amounts of funds and also funds of people who are not accustomed to energy efficiency or don't know how it works, you need to provide transparency. And this is exactly what the platform does. It does provide extreme transparency because there's no way we can modify the data between when the savings are generated and when you see the final number on your screen. The third thing is that we enlarge the accessibility to investments in energy efficiency. Right now, it's still a niche market for large investors. But what instead, if you could go to your bank and say, hey, instead of buying state bonds, I'd like to invest in energy efficiency or a dedicated project by companies. Well, that's what the platform actually enables. Another big part of it is the reduction of costs of human intervention or of certification of the savings. Most of the times when there's three parties involved, so ESCO, a client, and a financing partner, the financing partner wants the savings to be audited. Of course, they want to make sure that the savings are really there, and so does the client, because he's paying the bills at the end with the savings generated. So we want to make sure that he's paying the correct amount, and the investor wants to know he is getting the correct amount. So by removing human intervention and constant verification of data audits, we can reduce the cost by 10 to 15% by eliminating a lot of the steps that are normally needed to certify the savings at the moment. Basically, what we enabled is millions of people can now access energy efficiency projects, no matter where they are in the world. It doesn't matter which currency you're using, where you're based, or which companies are targeted for the energy efficiency project. And that is because no matter where you're sitting in the world, you can decide to participate in one of those. And this, of course, makes the scalability of this product really, really high. The competitive scenario, and I'm basically getting to the end of my presentation, is the fact that energy efficiency market has surpassed the one of renewables. Lots of people do understand what positive energy is. That means if I install a solar panel, I'll produce 1 megawatt of energy. I'll sell that megawatt of energy on the market, and basically I'm making money. What they don't really understand is if you're saving 1 megawatt of energy, then that, in a sense, is a return on investment, because basically the companies who are going to use less that megawatt less in the production of their products, which can return part of that as a return on your investment. So it's basically like a bond, and by doing that, they increase their possibility of accessing funds from smaller player. So what we've seen is there's a lot of inefficiency and highly fragmented market, which is basically dominated by few players at the moment, not in the energy service company area, but in the financing side. The other problem is that the companies that develop a lot of solutions based on blockchain technology, which is very different from the panel we have now because they're all focused on energy efficiency, but most of the companies develop technology to measure the production of energy, not really the savings. And that has been a big change when we started this project a couple of years ago and then started working with clients. Lots of clients had never seen this. They saw a lot of platform based on blockchain technology to monitor their production, maybe on solar panels on the roof, but never much to control the savings. I hope the presentation was useful, and thank you very much.
Yes, thank you. We will then move further to the second presentation of Ettore Piantoni. He will show us an innovative approach to use energy management standards and to be blockchain ready. Ettore Piantoni, he's an independent consultant working for ESCOs, industrial customers, and consultancy organizations. As a vice chair of the Sector Forum Energy Management and part of the European Committee for Standardization, he participated in the development of various standards and promoted the link with sustainable financing and taxonomy. So the floor is yours.
Ettore, you're on mute. Can you just unmute yourself, please? Okay, Ettore, just stop for one moment. Just stop moving. Stop moving your mouse. Okay, if you'd like to unmute yourself now.
Okay.
Okay, I'll give you back control. Yes, we can hear you now.
Okay.
1 second.
Thank you. Sorry about it. Thank you, Jacopo, for your insights. That's very interesting to know the way you are addressing the risk assessment of along the value chain of the energy efficiency. I'm trying to build up a little bit more on what you're saying and how standard can support your innovative business model. So if you look at the future, well, decarbonization will need energy efficiency as well as renewables. We see a future with decentralized production of electrical energy, peer-to-peer trading supported by digital technology, and blockchain can be one of these enable tools to make it happen. Virtual power plants, PPA, will be common energy supply contracts. And in this perspective, probably we are setting the scene of the Internet of Energy. It can be featured as a bidirectional or multi-directional flow of energy. So we need the smart grids, intelligent meters. And the same way we are trading information on the guarantee of origin, for example, on energy efficiency that is achieved, on reporting on the actual saving obtained, and therefore CO2 reduction, and maybe some financial information in terms of default rate of the projects, and tracing the peer-to-peer transaction. So, as you said, this probably will lead to enormous benefit in the way the market will work. It's going to become more efficient and with faster transactions and less time to implement the project. Energy internet then can be scaled down to energy intranet if you're talking about energy community, or if you're talking cluster of industrial sites where they can build up their own energy internet on a lower scale. So what are the critical success factors? We need to match the energy efficiency improvement and the financial assessment of those benefits in something that is material. As you said, you were talking about transforming energy saving in a tangible assets. In the standardization organization, we talk about materiality of the information. And what is the materiality of information? Is any significant information that can be qualitative or quantitative that is affecting the decision and the risk assessment of any interested party. The information is significant when omitting, misstating, or obscuring. It could affect or influence the decision of the primary users. And it can be technical information, can be financial, can be non-financial information. So it's something that is also dynamic. So that's the reason why we also talk about the dynamic materiality, because with the evolution of the technology and with the evolution of the sustainability concepts, then probably we will need to add maybe some elements of that will become important maybe in the near future. But materiality that is embeds results, transparency, traceability, trustworthiness, lean and cost-effective solution need some tools or some platform to work on. Let's see the building blocks of the energy efficiency. It all starts with the energy audit that is setting the situation, the ex-ante situation, what we have in front of us. Then the energy audit is defining what are the actions that we need to implement to reach, to reduce the consumptions, to improve the efficiency, essentially, more than reduce consumption. Then we need to form a contract with someone that is implementing it, someone that is financing, someone that is constructing, someone that is making the system operating to maintain it, and then finally we need to measure and monitor the results. Well, if you look at this sequence of activities, the value is generated that with the energy audit when I'm setting the scene and when I'm defining the target, the energy saving that I'm expecting, and it is materialized, it is make it tangible when I measure at the end of the process. Then we have the value capturing. And in the same way, where if we plot it in the value chain risks, then we have the energy efficiency. The major risk is the energy audit, where I'm setting where I am today, what are the key energy performance indicators, and where I want to be. So if you look at the whole chain, you can always think and see in this chain also your financial statement. Measuring and monitoring are assessing your savings. You're turning the kilowatt hours into euros. Operation is making your OPEX. Construction is making your CAPEX. The financial part is making your financial sides. And then you have all financial statement ready. Of course, all these actions are having a retroactive feedback, so you can essentially take and trigger any corrective action if something goes wrong. The risks are multiplicative, so along the value chain we need to take care of the weakest component, and this can be based on technical foundations, where we need to have solid base on the energy audit. We need to be on business foundations, so to do a proper due diligence and to address the business risk, and then all the other risks along the construction, operation and maintenance, and measurement and verification. But in a nutshell, let's focus on the weakest component, because this one is the one that is determining the risk of the initiative. I do not pretend to reading and seeing this slide, but for every steps of the value chain, we, as a standardization body, we have developed standards that are adding materiality of this step. So if you perform your activity according to this standard that are made by experts, let me say worldwide expert if you're talking about ISO standard, the European expert if you're talking about EN standard, but you have the best knowledge on how to perform this specific activity and to make it material for the next step in the value chain. The market is getting a lot more demanding. We have reporting disclosure that are set in the non-financial directives. We have the international accounting boards that are setting the information required to elaborate a proper financial statement of your company or of your assets or of your initiative. You have the document from the technical expert group on sustainable finance that is setting the scene for what are the green mortgages, what are the green investments, what are the metrics that you need to apply to qualify for this green investment. And we have the regulations that is just published in June, the 2008-52 that is concerning the implementation of the taxonomy. And then we will see in the coming months some other documents coming out and delegated acts from the European commissions. So we need to match all these elements together with the technical sides that we saw before. What if we consider building blocks of each process that share the same standardized, transparent framework and taxonomy for all the steps of the value chain? That's what we are proposing. And that's each block is a network code, so they will work as a clearance house of transaction. And it has a quantitative algorithm to check materiality and to assess the risk of these steps. So we are also building a chain of custody of the energy efficiency that strengthen the value chain. What we have in mind today, these blocks are not integrated, but we can integrate in them. So the first block is going to be the project origination, someone that starts with an idea, starting from the energy audit to build up a process, estimating a certain saving, defining a certain performance indicator, giving a value of the related investments, if applicable, to have a certificate of origin. And for these elements, we have standards that are helping you in defining this type. If we look at the blocks, we are talking as information aggregation and is checking for compliance with all the elements that are around it. Then we come with this information, we feed all this data, qualified data, material data to the financial responsible organization that is addressing the risk of the initiative, and then is evaluating the creditworthiness of the beneficiary, the creditworthiness of the ESCO, if it applies to the ESCO, and is determining loan to value, loss given default, all the parameters that financial institutions know on how to address and how to assess the risk of a project. Then we can have another block that is on, I'm stepping to the measurement and verification, because also here we have standards on how to provide material information on the actual saving or the actual benefits that are obtained by the measure that is implemented. And then you can link them all together. So we are building the elements on what we may call a blockchain or a platform that is addressing end-to-end all the process. And every step is having its own clearance house, so we can check the quality, the information, and it doesn't go through if something is, and it triggers corrective action if something is not there. This will add all the elements that Jacopo was saying in transparency, accessibility, scalability of the whole process. So we need to, how this discussion can help us, we need to connect the technical standard with all the other elements of the financial reporting, non-financial reporting and disclosure, and we need to mind the gap. Probably there is some missing gap of the information, or maybe some missing of materiality that you need to address it. And connecting these dots of materiality, we will enable the digitalization of all the supply chain that you are envisaging, Jacopo. So there is a great responsibility on all of us. The Green Deal is investing 1.8 trillion euros for financing a sustainable recovery. And we need that this money is spent in projects that are delivering the results. We won't have another chance to reduce the CO2 for our planet. So we need to have all the platform in place to ensure the effectiveness of the project, of the action, the transparency, the accountability, and the trigger action that are something is going wrong. We need to intervene and to make it sure it's reported to the original aim and target of the project itself. We need to streamline, and definitely the blockchain will help us to do things faster and to reduce the human intervention on defining the eligibility and the reporting and disclosure. And again, we see a great role of the technical accounting and financial procedures standards to implement them on the blockchain tool. And of course, there will be a dissemination of information and creation of culture about investors, consumers, service supplier, and the beneficiary of the services. What is your interface with the standards? Well, in the CEN CENELEC, we have different working group, technical committees. There is a technical committee that is specific on cybersecurity and all the elements of the blockchain. But if you're looking at the energy, probably SFEM and SABI, circular economy technical group are your technical group that are guiding you through the CEN CENELEC to evolve and to establish the platform, or to respond to the missing dots that are that you may have in your activities or in your platform to bridge the gaps. Energy management standards that we are developing at the moment. Those are the list of projects that we are working on at the moment, and one important thing that we want to make them blockchain ready. So we focus on the materiality, quality of the information, and the transferability of this information on electronic way. This is the roadmap that we see, but the most important thing that I'd like to attract your attention, that there will be a new working group that will start beginning of next year on the blockchain that will, so we are all inviting you to join this working group to contribute in materializing what we are describing. What is the takeaway? Well, the standard are the risking tools because they embed all the elements of the materiality. Is helping you to measuring and valuing the market benefits and the also direct and indirect market benefits that is your energy efficiency actions can deliver. And we hope that blockchain will deliver the transaction cost, will increase transparency, is the way forward for energy demand and cleaner energy supplier, meter to cash processes, and probably we can make through the dreams that energy efficiency is not measurable, and we think that blockchain will. Thank you.
Yes, thank you, Mr. Piantoni. Now we heard these two very interesting approaches, both related to blockchain, and which seems to me to be supplement each other. So I'm really looking forward to our discussion later. But now we heard so much about standardization, and in our next presentation, standardized contracts are also part of the presentation. It is about the ESI model. And Daniele Forni will introduce us to this Horizon 22 project ESI Europe. Daniele Forni is Chief Technical Officer of the Italian Federation of the Rational Use of Energy, FIRE, and works on national and international projects, especially those that focus on technical, economic, legislative, and regulatory issues, and the use of energy efficiency technologies. The floor is yours.
Thank you, Diana, for your introduction, and I would also like to thank Ettore and Jacopo for introducing some of the concepts that I will use in my presentation. I'm starting with some questions that I also put in my HOVA profile that may help to better understand the presentation and the concept of ESI. So one of the issues that Jacopo highlighted is that there is a limit in borrowing for ESCO, and so it's limited for scalability. But what about a performance contract with payment at turnkey? That could be another kind of solution, for instance. and how to build the trust in energy efficiency and make it accessible also for smaller enterprises and clients with less knowledge on and experience on energy. And but there could be other questions as why those investments are not happening, so there's not a scalability, so as the expected scalability, and can other tool as IoT and insurance on the performance guarantee help to scale up the energy efficiency. So the ESI is the acronym for Energy Saving Insurance, and this approach has been developed for Central America to mobilize green funding of the Inter-American Development Bank. With the ESI Europe project, we are adapting this approach to Italy, Portugal, and Spain. And some of the barriers for energy efficiency investment are linked to the lack of trust between actors and lack of understanding of energy efficiency, because that has already been explained by Jacopo and Ettore. So what usually happens is the energy efficiency investment has a higher upfront cost, and that is the thing that the decision maker sees, and that's the data that the decision maker sees. This could discourage the investment. Moreover, since, as already highlighted, energy efficiency have a high rate of return, typically when we do not understand an investment, we couple high rate of return to high risk. So what we want to do is to de-risk the energy efficiency investment for the client and for the banks, for the financial institution. So ESI project use a set of tools to do this, so to de-risk the investment, and so make it more accessible and more competitive with the other investment for the decision makers. This is especially true for SMEs, but it's very interesting as approach also for larger enterprises. So what are those tools? Let's start from a standardized contract based on a turnkey contract, very simple one, around 10 pages, with additional performance clauses and a suspensive clause. Then there is a standardized, again, validation procedure with a third-party validation entity. Thanks to those two first standardized tools, we also could have an energy saving insurance covering the guarantee results. We add to this an online platform to record all of the data of the project, the energy saving and CO2 emission reduction, and all of these standardized products help to get more access to green finance lines, also for smaller projects. What is the kind of energy saving insurance we are using to lower the cost? It's a surety bond type of insurance. For those who do not know about a surety bond, is like a bank guarantee, but without blocking the sum on your bank account. And the insurance is triggered by the arbitration of the validation entity. So this energy saving insurance is a guarantee for the client, so lowering the risk perceived by the client, and also for the banks who lend the money to the client. The financing structure being a turnkey contract, the client pays at the installation, at the turnkey, then, if needed, could find the money from the bank in an easier way, as I explained before. Being totally a market instrument, links already existing supporting mechanisms for energy efficiency and for credit guarantees and so on, also depending on the type of enterprises, size, sectors, and so on. And it allows financial institutions to mobilize their credit line, since, as I already explained, there is a third-party validation of energy savings and of CO2 emission reduction. So this is a scheme that, let's say, the interesting part, the innovative part could be the insurance, because for the rest is an usual scheme of an energy efficiency investment with the financing from the banks. The validation process that helps to build trust in all of the participants to the deal is conducted by an independent validation entity that must be trustworthy for all of these, of the aforementioned and parties, and is based on a standardized procedure, and there are already standardized methodology for 9 very diffuse cross-cutting technology, such as electric motors and variable speed drives, lighting, air conditioning, refrigeration. Okay, this is not a vacuum cleaner, but is a boiler, but always remind me of a vacuum cleaner. The solar PV, solar thermal, cogeneration, and compressed air. The validation process is divided in 3 parts. The first part is at the design phase, and it activates the contract, because as I mentioned before, there is a suspensive clause on the contract. So the contract only activates when there is the validation by the validation entity, plus there is the insurance contract is signed. Then there is a second validation at the turnkey, also checking the proper installation of the metering devices, sending the data. And there is a validation of the saving at the first year. In case of disagreement on the savings, the validation entity who followed the project since the beginning act as an arbiter. So in a very quick way, having all of the data about the project already in-house. We develop the standardized validation methodology with the international certification body SGS, who will also be the validation entity for the pilot project that unfortunately did not start yet due to the lockdown. So to resume, to build trust, we use standardized turnkey contract with performance clauses, standardized validation procedures, and an energy saving insurance. For the MMV, so the measurement and verification of saving and CO2 emission reduction, we are based on the International Performance Measurement and Verification Protocol, option A in backcasting, and we are going to send all of the data anonymized on the DEEP platform, also to help financing energy efficiency. And to all of these, there is this blockchain-based platform to record in an unchangeable way all of the data of the project and of the saving and CO2 emission reduction. We also, in the project, we also have to do marketing and promotion. So as you can see behind me, there is this, we created this brand, the Go Safe with the ESI brand, that we are diffusing to the technology providers and clients interested. We are going also to create an ESI toolkit to explain how to implement GoSafe and lesson learned and successful cases. Unfortunately, as I mentioned before, we were not able to start the pilot project yet, but we hopefully will do very soon. And just to share with you some of the lesson learned, when we started this project, we were thinking that most of the interest would have been on from SMEs, while also larger enterprises, big enterprises are interested in this, because sometimes they do not feel confident on some kind of project, some aspect of the energy efficiency project that are presented to them. Saying that, I hope that was clear enough through internet, and that it was interesting for you. Waiting for your question. Thank you.
Yes, thank you, Daniele. You have a really good timekeeping. You have still minutes left. Yeah, now we heard about the ESI model with guaranteed energy savings with the validation process. And in the last presentation now, Dr. Winfried Braumann will explain how guarantees works within the other Horizon 2020 project, TrustEE, and why standardized energy performance contracts and power purchase agreements terms, why they are important for realizing long-term financing for industrial SME projects. Dr. Winfried Braumann, during his time as the managing director of Finanzierungsgarantiegesellschaft, he has developed guarantee schemes for venture capital, private equity, and infrastructure investments. And today he is responsible for the business development of the REENAG and pursues acquisitions and corporate finance projects. The floor is yours.
Thank you, Diana. I would like to start with some calculations we did in the TrustEE project, and where we tried to calculate what investment cost of substitution by renewable energy would be. Decarbonization in industry always means replacement of fossil fuels by renewable energy sources. And in this case, we tried to calculate the investment cost of substitution of natural gas by solar thermal heat. We did this for several countries and also other technologies, but in this case, just to show you some numbers, we have calculated that it would cost for Austria alone nearly 8 billion euro to substitute natural gas for producing process heat in industry sectors using process heat below 200 degrees Celsius. For other countries, there are other calculations. You should not be too much confused about the low number of Sweden with relatively low number of Sweden, where 2.8 million seems very low concerning solar thermal heat. The reason is that Sweden is using only very little natural gas for producing process heat for industry. But there is another issue, of course. Investment costs are not only huge, but currently, at least in the countries shown here in Austria and Germany, it's a little less a problem in Portugal and Spain. Those investments are under current energy prices not yet financially viable. which means that the production of solar thermal energy compared to production by natural gas is too expensive, and therefore some subsidies would be needed. We have also calculated those subsidies with the use of a tool we have developed in the context of this Horizon 2020 Finance Trustee project. And looking at Austria now, again, for the case of substitution of natural gas by solar thermal heat, the total investment is shown here with 100%. As I said, it would be around 8 billion euro. Under current energy costs, we would need a subsidy of around 20% of those investment costs to bring the remaining costs down to a level where we would see at least a non-negative present value of such investments during their lifetime. Of course, a financial viability, which is always the prerequisite for decarbonization investments in industry, can be improved not only by investment subsidies on capex. They would be improved, of course, by increased energy prices of fossil fuels. Also, a CO2 tax would do the same, because also it would increase the energy price of natural gas. And there is a third important item, which are the financing costs included in this calculation. And if we would use public guarantees for supporting financing, it would also mean that financing costs would lower, because then the risk premium calculated in those investment cost calculation would be lower. We have compared two scenarios, prices as they are now and prices if we include a CO2 tax. You can see the results here. Of course, a CO2 tax would bring down the needed subsidies further. But coming back again to the 8 billion euro we would need for Austria alone as an investment for industries in the sectors which are using process heat below 200 degrees, 8 billion euro, we would have to compare with investments as they are done currently in those sectors. So if we look at wood processing, the plastic sector and food processing, they are currently investing 1 billion euro per year for all the investments they are doing. So if we compare this to 8 billion euro just for substitute natural gas in their production, it seems, of course, to be a mission impossible. What we have also done quickly is look at the CO2 abatement cost as a measure for the cost efficiency of investments and policy measures for climate protection. And it turns out that the subsidy cost of 75 euro per ton could be covered by a moderate CO2 tax, meaning that, of course, it would make sense from a climate protection and climate policy perspective to subsidize and to invest. But as I said, it seems to be very difficult and a much too high burden for industry itself. So how could industry or how could the economy finance such a investment at all? Who should finance it? Well, industry could be supported by guarantees for bank loans. Of course, they would need bank loans to finance decarbonization investments, but from the perspective of corporate finance, this is something which is quite difficult because decarbonization investments usually have very long amortization times. They do not generate additional revenues from selling products or services, and therefore such investments will deteriorate debt coverage ratios and credit ratings, making it even more difficult for SMEs with low credit ratings to raise such debt from the banks. So decarbonization investments could even be impossible for SMEs. So we would need public guarantees in any case, but public guarantees just for supporting loans, the access to loans by SMEs would not improve credit ratios. They would support the financial viability. They would support and facilitate the access to long-term debt financing. They would even make it easier to get additional financial debt for those companies, but still the higher debt coverage ratio would be there and would affect credit ratios negatively and reduce the creditworthiness of SMEs. Therefore, we have to look for an alternative, and as my speakers in the webinars before, it's very clear where the alternative has to be looked for. Industry as such is not the right sector to insource the energy production. Currently, the energy sector is producing and selling energy, and this has to be continued, but in another way, of course. Because as we have learned also from the webinars before, technology suppliers and ESCOs are offering already right now energy performance contracts and power purchase agreements to supply their customer with the required energy, without meaning that the customer himself has to invest in energy saving or energy producing assets. So as it is shown here, and as it has also been shown in the other webinars, the energy supplier invests in the required assets such as heat pumps, heat exchangers, biomass, solar thermal systems, etc. And then the investments are paid off over time by the customers with the payments for the supplied energy. And of course, there is a very important difference between investing by an industrial company in assets or by buying energy, because long-term payment obligations are not accounted for as financial debt. Therefore, they are not burdening the credit rating and the financial mobility. Nevertheless, the receivables from such contracts can be sold or forfeited by the EPC or PPA supplier to financial investors, therefore opening the way for refinancing such investments in the energy sectors by the ESCOs. And financial investors, of course, would be very interested in such a very huge market, as I said, 8 billion alone in Austria. But as we have also heard before, of course, there are some risk issues in EPC and PPA business models. There is, of course, on the one hand, the long-term credit risk or the counterparty risk of the customer, because EPC and PPA business models are based on a take or pay obligation by the customer. It means that the customer who is not taking the energy, or even worse, does not pay for it, then the repayment of the investment would stall. So long-term power purchase agreements rely on the creditworthiness of the counterparty. And then we have on the other side, as we have learned just some minutes ago, there's the performance risk of the energy supply. The customer will, of course, not be prepared to pay if the energy supplies or the energy service are not performed, are not delivered as agreed. And therefore, talking about guarantees for EPC and PPAs in a situation where the ESCO has assigned the payments to refinance investments, we have to talk about two forms or two ways of covering risks. The one would be to cover the credit risk. The other one would be to cover the energy supply risk or the performance risk. Both could be done, as far as the investor is concerned, in principle, with a kind of a bank guarantee, or should call it here payment guarantee, which can be called when the single payment becomes due. So such a guarantee on the one hand would relieve the investor from the credit risk of a payment default, but also on the other hand, as far as the investor is concerned, also from the performance risk that the customer holds back payment because the supplier has not delivered due to his contractual obligations. So what I am proposing here is a payment guarantee which would, as far as payment is concerned, also cover the performance risk. Well, you may say those risks might be too big, might be too uncalculable for public budgets. I do not think so. I do think that standardized EPC terms, that using collateral like title retention and cash reserves and others, and of course also the recourse against the customer and the ESCO will allow us to protect the guarantor against excessive guarantor default risks. Even if there would be some insurance, as they have been shown before, it would be much easier. And which, using such guarantees, we would have a system not only to develop investment in the energy sector, but also for refinancing such investments via the capital markets using green bonds, etc. Thank you very much.
Yes, thank you, Winfried Braumann, for showing us how de-risking is done in TrustEE. Yes, now we have time for discussion. I've received some questions, but if you have any, please write it in the Q&A section on the right side on Whoever. So let's start with Jacopo Visetti. Yeah.
Here.
Is there a role for governments to play in implementing this platform? So,
Okay, so yeah.
Yeah.
So basically, the idea of the platform actually comes somehow from existing technology, different one, but that government had implemented. I'm referring to, for example, the white certificate system, which some countries in Europe adopted. Not only in Europe, but I'm going to take the European example. So based on that experience, which was somehow enabling to get an incentive out of energy efficiency projects on top of the savings, that is, we decided to basically expand that concept to any kind of project, and also remove the I would say country barriers, because at the moment none of these systems are interlinked. So basically, yes, of course there is a role. I would say more from the platform itself. I would say from the concept underlying this platform. And the first one I would suggest for governments to take on is the transferability between countries. If each system based on energy efficiency we could use the term tokenization, but securitization is also a good one, is limited to a single country, then the scalability of the underlying is basically reduced significantly. So internationalization, borderless, is the advantage it could take. As you know, the platform is available to everyone. So of course, I would say there's no block in using it for governments, and I hope sooner or later this will be the case.
Okay, thank you. And as you're speaking of international, accessible, etc., the transparency of the platform, how do you guarantee the data protection, the GDPR issues?
All right, so basically what investors, in that sense, we could call them investor participant in the project, see is the final results of what we could say the performance of the savings. They won't actually see on which machinery this is done, the total amount of savings which are generated from each single project, although this is possible if the clients decides to release this information, because as we know, energy consumption data is protected by the GDPR. So we do ask the client to release this information. If he doesn't want to, it makes no difference for the results in the end. The investor will see in his dashboard in the platform the client is targeting, because he can choose that, of course, but he won't see what the total effects of the savings are as a whole, but just relating to the share he decided to participate on. So being the data that fragmented, you won't be able to reconstruct, I would say, the final piece of the puzzle in order to deploy what I would say confidential information. You will only see what's necessary for him to be able to evaluate the returns of the investment. So basically, by separating all these steps, they're all as a whole, as a single part, transparent, but not visible to each part of the puzzle. Therefore, nobody is actually in a situation where is actually breaching the law in that sense.
Okay, thank you. And then I have a question for both of you, for Jacopo Visetti and Ettore Piantoni. So, to Ettore, Jacopo mentioned that the platform can be accessed anywhere in the world, but the European Committee of Standardization, it is European. So can you imagine how this can work well? And are you also working together with the ISO or others at the global level?
Ettore, you want to go first?
You go first, Jacopo, and then I will follow you.
All right, yeah. So in my view, it's what the work has been done is paramount. Standardization is paramount, and I can give you many examples on that. I can give you the example of carbon credits. When there was no standard, there were some transactions, very little. When standards popped up and were actually accepted in a positive way, transaction carbon markets exploded. The same with guarantees of origin. There used to be trades, I'm talking 2006, 2007, about virtual PPAs in that sense of guarantees of origin, which were basically just agreements. Guarantees of origin reflect renewable energy. We've seen it in some of the presentations after mine. Very few transactions. I would say 1,000 a year. Now the transaction on guarantees of origin, since there's a standardization, for example, at the AIB, thousands a day. Transactions in energy efficiency, yeah, there are. I would say on the securitization side, on the standardization side, there are some, but how many Hong Kong, for example, investors do we see actually securitizing or deciding to securitize projects who have been done in the south of Italy? Maybe 1 in 100 years. If we get to standardization in contracts and for energy efficiency, then yes, we will get to a point where there's going to be a trust. And if that trust is based and we all agree that the standard is acceptable, then transaction can increase. And that, of course, is paramount for our platform as well, in that sense. Absolutely.
Well, I try to complete a little bit the answer of Jacopo. Of course, at CEN CENELEC level, we are working very closely with ISO. So we have agreements on which we don't overlap each other, but we tend to complement each other on standard development. And in Europe, we are adopting ISO standards, or ISO standard or EN standard can be transferred in in ISO standard. Just to give you an example, probably the first or the most famous standard, ISO 50001, actually was born in Europe. It was EN 16000. And then when it was recognized that it was a global value for it, ISO took it over and expanded at the global level. So definitely we are working together. Let me say that the slightly difference between the ISO standard and the EN standard is that our major stakeholder in Europe is the European Commission. So if the European Commission is setting some requirements, then we are obliged to implement it for our member states. And some requirements may not be recognized in states around outside Europe, but that's the only difference. Otherwise, we cooperate very closely, and we are looking forward to have a global platform. So as Jacopo said, we can scale up the number of transactions for nearly nothing to, well, to a sizable business, because then it's going to be a business proposition, and then the money will flow, the energy will flow, and we will decarbonize Europe quicker than do it individually. So that's the aim.
Yeah, thank you both for the answers. I have another question here to go a little bit deeper, because we didn't have seen how, Jacopo Visetti, how you're doing that exactly. That means, what do you, how do you measure or do the measurement and verification, for example? Do you have baselines, etc., or what you tokenize, like investment costs or saved energy? And are there any technical standards or guidelines where you refer to? And like transforming saving the saved kilowatt hour in money? And the last point would be, what kind of requirements are there for the providers? Are there only ESCOs, or do you have any other restrictions or etc.?
Okay, so we're gonna start with the first one. there's quite some, but yeah. So basically, I'm referring to the text, the question. So what do we tokenize? First of all, I think that's the first one I can answer. What we tokenize is the savings, the generated savings. And the reason is that we want to make, the baseline was to make them transferable. So we wanted to be, if you consider, we take a step back, we consider the savings generated, so the gap between the baseline, the initial step where the company is, or the house is, whatever that is, and the savings you get, that can be considered a financial performance. So when you invest, let's say 100, and you take down the bill to 50, right? You keep paying $50 or 50 euros, whatever the currency might be, to the utility, and you start paying back, let's say 30 to the company who has financed your project. So you have a bill at the end of the day, which is 80. So you're already making a saving. 50 still goes to the utility, or was providing electricity, and 30 goes back to pay back to the investment. All of the savings you generated, though, the 50, are actually a financial performance, because they're basically paying back your investment plus an interest, which is decided. How we do define a baseline, that's basically the same. We didn't invent the wheel in that sense. What we're doing is basically instead of doing an EPC, so energy performance contract, we're doing an energy performance smart contract. So that means that when you decide the baseline in any kind of energy efficiency project, you define the baseline by contract. That's exactly what we do in each project. When you decide the performance, which needs to be guaranteed or not, insured or not, that's the same in the token. So you decide that the certain performance needs to be provided. Whatever is on top is very good. What is below that, we'll need to cover it up. So how is the baseline defined? The same way you would define it in any other energy efficiency project. So how much is your consumption right now? We fix it at this price, and the savings are returned in that sense. And that also asks part of the question, how do we define the value of the kilowatt? The value of the kilowatt is designed on the price of electricity in T0 in that sense. So when we decide to start the project compared to the baseline, and that's what the payback is going to be. So although energy prices are different in different countries, your return percentage-wise is still going to be the same in that sense for a reason, because you define it at the beginning of the contract. So even if the electricity would go down to 0, you would still have a cost to pay back in that sense. Another part of the question was, sorry, it was a big one. How do measurements and verification baseline valuation savings? Okay? So so how? Am I correct? How do we transform saved kilowatts in money? Yeah, right. So basically, the token represents a value in that sense. I was just going back to the what I just said. So the token represents a value which can be exchanged for money. So basically, when you put money in and you get tokenized savings back, this tokenized savings have a value, and the reason it has a value is return on investment. So the company is actually paying for that kilowatt, and by paying it, by returning it digitalizing wise, they're basically paying money in your accounts. So it's basically exactly as you would have a bond. How does a bond get liquidated? The same thing, you can liquidate a token. What are the requirements for the providers? No, it's not, of course, not only ESCOs. We started, the project is in working right now only with ESCOs and little, I would say, small investors, unfortunately, or in that sense, bigger investors, because they were the first one to understand the value that this can provide. But there's no limitation, of course. If you're a company, you already have an energy efficiency project which you think is valuable and can be evaluated by third parties in that sense, then we're happy to list you on the platform and have people start financing that. We're starting to doing this with, I would say, a major commercial name who has a double, I would say, reason to do this. They're listing their project in order to have it financed. They wouldn't really need the finance, but what they want to do is to have stakeholders participate in a green initiative inside the company while actually physically doing something to the production line. So there's two ways. If you see this token, it can be perceived, of course, as a mean of digitalizing energy savings, but in another way, also in a way of communicating some of the policies, CSR or not, that you're doing inside the company. So it has a strong, I would say, communication effect as well.
Okay, thank you for the detailed answer. And now I have some questions left for Daniele and, of course, for Winfried. Daniele, question. How are financial institutions incentivized to implement this model? Because some financial institutions may see too many risk or high risk investments in the energy efficiency projects.
Well, okay, there's no, let's say, external incentive because it's all market mechanism, but we we talked a lot with various banks. At least I'm talking for Italy because I'm following the adaptation of the model in Italy, but I see also similar results, but not directly in Portugal and Spain. So there's interest for the banks in, you know, the banks at this moment are as utility. They need to find additional service to offer to their clients. So this could be an additional service, the banks acting as a one-stop shop. They are already thinking about that. And some, there are smaller ones that are maybe a bit more advanced than these, bigger ones that are anyway interested and sensitive to green financing and so on. So they really want to push their clients to invest in energy efficiency and ease this investment. So in other, the experience that was transferred to me from previous implementation is that the bank is collaborating, is giving information to the clients about this approach and so on. The third-party validation at the design stage, at the implementation stage, and at the saving, everything is standardized from the contract to the validation procedures and so on, make it much easier. And then plus the insurance is lowering the default risk of the client. So for the bank is much better than just giving the money to a client without knowing. Also because we are talking about SMEs. Usually SMEs don't ask, huge amount of money, and usually they just give the money knowing these SMEs without knowing anything else. This is much better for them because they know they are investing in energy efficiency and not perhaps buying a new car or for I mean for the owner or so on. So that's absolutely reducing the risk and rising the competitiveness of the enterprise. So that's there's interest in each country. There are at least 2 or 3 banks that are already have signed some kind of agreement or are anyway interested in the approach, in sustaining the approach.
Okay, may I ask which countries have done that?
Sorry, I say at the beginning, but maybe I have been too quick. It's ESI Europe is adapting the ESI approach in Italy, Portugal, and Spain. So I mean the rationale on this is that those are the 3 member states where the energy prices are higher compared to other for SMEs. So that was the rationale on these 3 member states.
Okay, thank you. As you spoke about SMEs and also that even larger companies are interested, what is the volume of the projects generated through the insurance guarantee innovation? Does this model had also success in other regions? But I think
so far we have just information on successful implementation from Central America, where the project initially was designed to and was introduced some years ago. So there, all of the funding line were used and now has been refinanced by the Inter-American Development Bank. In Italy, Portugal, and Spain, so far, also due to COVID, we had a lot of interest from smaller and also larger enterprises, from providers of a different dimension, ESCOs, also ESCOs, because this is a different moment also for them. So having payment at turnkey is interesting for them, and from clients of different size. But so far, we don't have a signed contract. We hope to have many, but I don't want to say because I mean, I would have really liked to present. I was expecting to present here in this conference some pilot, but unfortunately didn't happen. And so we will also we will ask an extension pretty soon of the project to have some. And we are also, there are some contract that hopefully will be signed soon. So that's the idea. But we really are hope to scale up. But this is the situation so far.
Okay, thank you. I'm really looking forward to the pilot projects in the summer. And speaking of COVID, Winfried, we talked about credit risk, and how do we analyze it during the context, in context of COVID, the current situation?
Well, the basic concept of credit risk did not change in the current COVID situation. Of course, many companies have now even worse credit ratios or credit ratings. But on the other hand, the guarantee instrument has been used widely for this reason now in Europe. And therefore, well, it's up to public guarantees to balance this and maybe bring it back on a road where we can see growth again. So I don't think that the basic concept is changed by COVID and should be changed by COVID.
Okay, thank you. And another question here is from the audience, are any countries considering climate guarantees of the type you recommend? And how far has this policy discussion come?
Yes, we are currently discussing such a concept here in Austria. And I want to maybe stress again that the, well, usual way of providing guarantees is providing guarantees for loans, investment guarantees. This concept can be used here, but it will not really improve the conditions for growth of EPC and BPA business models and markets. We need this new concept, which is in principle a payment guarantee. You can compare it to export guarantees, which have been used widely in many countries of the world. So we really could build upon concepts of export guarantees, introducing this kind of BPA and EPC guarantees in that context. And as we know, export guarantees have been a very successful way of fostering growth by exports, and using similar concept for PPAs, I think would also be the right way to go forward.
Okay, now I think we have not that much time left. I have a question for Daniel and Winfried. You heard this blockchain topic today. So what do you think? Is it, can you imagine to work together somehow?
Well, in my case, not only imagine, but we are extremely interested, of course, in using the possibilities which are provided by blockchain models for standardization, for verification. I think this would be an ideal fit for the overall concept of financing transition to, well, PPA, EPC, etc. guarantee markets.
Okay, Daniel, what is your evaluation or your opinion about blockchain?
Well, we introduced the blockchain in our platform, so we were enthusiastic to do it, and we also we are implementing at the moment because we think that could be very useful to an additional tool to build trust, because the unchangeability of the data, of the saving data, could add transparency. That is one of the main characteristic of also the MMV process. It must be very transparent to work well. If it must be the counter, I mean, kilowatt hour, then kilowatt hour on one side, and then money on the other side, it must be transparent to work well. So we add, so we think that it could be one of the piece of one important piece of doing this. We decided to have this third-party independent evaluation, but also, I mean, the blockchain as a useful tool.
Okay, thank you, all of the presenters. I think it was a really exciting with the presentations you held, and I hope it was a fruitful exchange for everybody here. And thank you also for the audience for the interesting questions. And I want to point out that we have this end of the day networking session at 4 o'clock. So if you are interested to discuss further with that very interesting topic, I think, and yeah, so I think we can come to an end, and thank you very much. And maybe we hear each other in the networking session. Bye.